Hello and welcome to Pro Trader Strategies Market Commentary for Thursday, May the 7th. I'm Eric Wilkinson, and yes, you very well may recognize me from mainstream media where they used to call me the Wolfman, and I talked about economic and geopolitical environments and how that affects the overall markets, and on top of that with some market analysis. Well, I do the same thing in these daily market commentaries, but I layer on top of it some option strategies that we can implement into our portfolios in order to increase that overall yield. Only way to really capture the S&P and better that is to own some ETFs and or some stocks and then layer on top of it some option strategies. So I talk about the option strategy aspect of trying to increase that overall yield in our portfolio. Well, without further ado, let's get on with the economic data because we are at the beginning of the month. First Friday of the month, we get non-farm payroll, one of the biggest numbers, especially right now with coronavirus, to tell us how the economy is doing and how the employment outlook is looking. It's not looking too good right now, as we can imagine. Right now, we got the unemployment claims comes out the day before, and that was expected to be 3 million. Now, that is a massive number. Usually, we're looking at, hundreds or 100,000 to 200,000, right? Well, it came in above that 3 million mark by 169,000, which would be the normal reading. So a massive jump there. We also got unit labor costs coming in at 4.8%, expected to be 4.3%. So that's good, but we aren't seeing people really be employed. That number right now since basically March has increased by 33 million people being unemployed. Some of the hardest hit is on the East Coast, obviously in like Philadelphia, Chicago, and I think Connecticut. We're up in the 16, 17%. Here in Arizona or Midwest, basically Arizona, Utah, and Wyoming have seen the smallest jump, and those are starting to run around 6%, which is still pretty darn high. So anyway, with that being said, we are seeing the NASDAQ at some points in times today. I haven't checked it in a couple of minutes, but we were positive on the year and only 10% away from the all-time highs, which is a little bit crazy to think about, especially when we are still seeing the lockdowns happen. All right, so let's talk about the overall markets. We've got the Dow Jones Industrial Average here up almost 400 points, starting out with the equities today, because those guys are really starting to make some moves, as we can see here with the Dow Jones up quite nicely today. The NASDAQ up above 9,000 today, up 126 points. This is what I was talking about, up higher on the year right now, and only, like I said, about 10%, less than 10% away from all-time highs right now, about 7% at this point in time. E-mini S&P's up 50 points. They are the ones that are a little bit more realistic in my eyes, to be quite honest, because we're right back down to that point of control, and that's where the most time and volume's been spent. I think that that's going to be a bit of a magnet, especially for the E-mini S&Ps, at least going forward for the next couple of weeks when we start getting more data out about what's really happening in our economy, because right now it's mostly speculation. Equities, yes, they are leading the way because there are future expectations of growth here. But one thing to note is the longer these lockdowns happen, the longer this recession will last. And the fact that we are in some markets at pre-coronavirus levels, those are future expectations also, and that's when we were talking about 3.5% in the unemployment rate and the economy doing very well. Well, now we're talking about the economy being in a recession and still at those levels. So that's where the mindset is kind of a bit of a disconnect. Something to note here, though, is that we're seeing massive inflows of capital into the equity markets as all these people that are sitting at home are wondering what to do. Well, they're starting to become day traders, and we're seeing that TD Ameritrade opened over 600,000 accounts since the beginning of this whole epidemic beginning. So that is a lot of money coming into the market, and we talked about this before, where those newer accounts are usually buy side. So they're coming in, they're trying to take advantage of it. They've seen what happened back in 2008, 2009 with the market coming off, and have it instilled in their brains that they need to take advantage of those types of pullbacks, and they're coming in and really supporting this market. So this is part of the rally going on in equities. Is a lot of these newer accounts, which are usually going to be buy side, are really starting to ramp it up. And financial apps are seeing over a 55% growth in usage since 2019. So just a massive increase of the day trader, if you will, while people are sitting at home. Maybe a lot of these people are unemployed as well, but on this lockdown, they're sitting at home trying to see what to do, and they are throwing all kinds of new money at this equity market right now. And we're starting to really see some upward momentum. And we got the breakdown of the E-mini S&Ps. These are 30-minute candles. You can see overnight, basically pretty bullish. No attempt whatsoever to flush those guys out, which, you know, are usually the weaker hands. We like to see some of that flush out happen, but when we don't see that happen, that usually means there is going to be a sustained bullish move during that day. I expect that to continue to give us some positive pressure today. Tomorrow is going to be huge because we got that non-farm payroll. We're going to really see the real data, the real important aspect of that number. ADP is a little bit off sometimes. This one is the one we're really going to be looking at. And we know that going into the weekend, people don't really like to hold on to their short or the weaker hands. Some of these newer people have seen some massive rallies during this week. They're going to be wanting to cover some of that heading into the weekend. So will some of the major investors as well. They don't like to hold on into the weekend because there is that risk of not being able to get out. Crude oil making another move higher. It looks like it wants to get back into those 20s and maybe even test those 30s if we get above this $26 a barrel mark. I've talked about that being major resistance. We didn't sustain that move yesterday, but today, as of right now, we are just slightly above that line in the sand. It's bumping up against the 50-day moving average, which lines up with my Fibonacci there around the $26 a barrel mark. Now, a lot of this has to do with different economies opening up, expectations that there's going to be some more demand for gasoline. Manufacturers are starting to open up. That is where the real demand comes from. So the market starting to make a bit of a move higher there. I don't know if we're necessarily going to be able to hold on to this 26th handle, because I think that the demand is really not there. Yesterday, though, we did see some crude oil inventories, and they were a little bit lower than what was expected there. So that's also giving a little bit of support to this market. As a matter of fact, I think they came in at a build for crude oil. Let me just go double check it. $4.6 million or 4.6 million barrel build, expected to be an 8.5 million barrel build. So 4 million barrels less than what was expected. And that's what's given us a little bit of a lift there. It's kind of showing that there is a little bit of demand out there for crude oil. Not so much in my eyes. No, I think it's more that they are cutting back on supply. I don't think that demand is really driving this market. It's more of a cutback on supply, which limits what's out there, and that could create these spikes in crude oil going forward. All right. The other thing that we got to look at is gold futures back up into that 1700 handle. Now, I talked about this. Anytime we get below that 1700, I think that we're really going to see some support in there with the weakening of the dollar. The printing press of the Fed is really going to drive the gold bugs to move higher in here. Also, we are seeing these new accounts on the trading platforms go in there and buy gold. That's one of the things that they are looking at, and cryptocurrency, don't get me wrong, but all of these alternative to the dollars are really getting some support through these new accounts that are being set up. Bonds back up into the 180 handle. Yesterday, I was a little bit surprised that we broke much below that. We were trading in the 178 handle at for the better part of the day, and it tested that 50-day moving average, but was supported there. Market rallied. Today, we're getting a follow through back up into that 180 handle, which I think is really the sweet spot for the bonds. Somewhere between 180 and 183 is really where I think the bonds are going to kind of trend sideways. Great opportunities to take advantage of it. You get those pullbacks, we can sell puts against it, and you get those rallies, you can sell calls against it, because I don't think that we're really going to go and see those all-time historical lows in the interest rate, which is all-time historical highs in the price. One thing we didn't have an opportunity to talk about, and I just have Amazon up here, but let's take a look at Disney, because you guys know that I rolled my calls out in time to the 130 handle in Disney. I'm holding on to those. They're still holding on to a little bit of value. I've made a nice trade with that. I ended up getting into those at about 43 cents. They're trading about 20 right now. 40 cents, and trading about 20 right now. So about 50% of my max profit. That would generally be where I take those calls off for just a trade, for an earnings type of trade or something like that. But these are covered calls, and it's in Disney, which I'm not really thrilled about at this point in time, because one of the major drivers of their earnings is in and around these theme parks, which people aren't going to. They haven't even opened those up. One thing that is a shining silver lining around this Disney trade is that their streaming service is doing very well. They've seen since November 51 million people sign up for their streaming service, and during this coronavirus they've seen another 5 to 6 million people sign up for that, as homeschooling parents are signing up for their kids so that they can watch these Disney movies. So Disney doing better than what was expected on the top line, so that is a good thing. I don't think that they are going to get up into the 130 handle in the next 40 days, though, so I'm going to leave those short calls on, or those covered calls on my long stock for a little bit longer here. All right, and that's all I've got for you guys, a little bit shorter today, because we're getting ready for this webinar on volatility and how we implement these options into our strategy. I go into a lot more detail than what I talk about in these daily market commentaries, like strike location, environment, the duration we need for setting up these in order to increase our probabilities of success. Right now, we've talked about this. Say, for instance, the S&P, I believe it's going to kind of sustain right in and around where we are. I don't see a massive move higher, V-shape. I don't even think we're even going to see those yearly highs like we're seeing there in the NASDAQ, or at least positive on the year like we are seeing in the NASDAQ. I talked about, I think the NASDAQ may be a little bit overvalued, but I can justify it because it holds a lot of things in there like EA Sports and some of the tech sector, which helps build out our home theater or our home office for people that are going to be working at home longer. S&P, not necessarily that case, and this is going to be a good opportunity to do something like the Iron Condor in there. All right, so actually the Iron Condor, we're going to be looking at building that strategy out. It's a good one because it's limited risk. We know where our risk lies, and therefore we can take advantage of this sideways market, have limited risk in case anything crazy happens going forward. It's a good thing to have on, especially in these types of environments, or in this type of equity volatility that we're seeing. So check that out. Go to protraderstrategies.com, and I'll be doing that at 4 o'clock Eastern, so you can sign up, plenty of time. Keep in mind, we are an educational company. Please read over this disclaimer, as we are not trying to give investment advice. I'm only here to teach you guys how to trade options, come up with your own assumptions moving forward, and if you can't take that, take it easy.